and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition where our focus is on the Q2 earnings, and the company on our radar today is KEC International, which is a global EPC firm having presence in over 45 countries across continents. Now, the company has posted its numbers for Q2, that's the July to September quarter. The net sales have come in at 4499 crores, which is up 10.7% from 4064 odd crore rupees that was clocked in September of 2022. The quarterly profit has come in at 55.8 crores in September 2023. That's been largely flat with an uptick of just 1%. EBITDA, however, has grown definitely about 50 odd percent at 290 odd crore rupees. And to discuss more insights on the earnings this time around and the outlook going forward, I am now joined by the top management of the company. Mr. Vimal Kejriwal joins in. He's the MD and the CEO of KEC International. Welcome, sir, and thank you so much for taking the time out for this discussion on Business Today Television. Let me kickstart by asking you, how happy are you on the Q2 performance this time around? What contributed to the factors in terms of the growth on the top line this time?
So good afternoon, Sakshi, and thanks for having me. I think if we are generally happy with what we have been able to achieve. We achieved almost 11% revenue growth. If you look at our EBITDA, we are 170 basis points over the same quarter last year. And generally, the guidance numbers are in accordance with the guidance which we had. Our PAT has not grown much because in the corresponding period last year, we had, I think, 20 or 29 crore of tax write back. Otherwise, as you said, PBT has grown, EBITDA has grown, sales has grown. So overall, we are quite happy. The other piece why we are happy is our T&D business, which is the core of our business, more than 50%, has also bounced back. So overall, I think we are pretty okay. I'll say happy with the numbers.
Okay, and what's the kind of guidance that you have overall for the entire fiscal year 2024?
For the fiscal year, we have said that, last year our revenue was around 17,000 and odd. So we said that we should be around 20,000 crores of revenue. So anything 15% plus would be our revenue growth. Okay. And on the margins, we had said that for second half, we should be closer to 8%. First half, we are close to 6%. So overall for the year, we should be somewhere closer to 7% is the guidance for the year.
Okay, got that. So you've also been receiving a lot of orders of late. Could you tell us the current picture of the order book, and in Q2, what were the order flows like?
So our overall order flow, I don't have exactly for Q2, but overall order flow for the half year was around 9,000 crores. Okay. And we have a guidance of around 25,000 crores. So on H2, we do expect to receive around 16,000 crores of order intake. And if you look at the breakup, around 2,000 crores was from civil, then we had cables, and around 800 crores from railways, and the rest was from our transmission distribution division.
Okay, and what's the execution currently for the orders that you've already received, sir?
So sorry, what would you like to know on that?
The execution, I mean, is it already executed? Is it in pipeline? By when will it be executed?
So our total order book today, unexecuted order book is 31,000 crores. Okay. And another 4,000 crores are L1. So in a way, we are sitting on an order book of 35,000 crores for execution beyond quarter two. So part of it will obviously get executed in H1. We are expecting a revenue of around 11,000 crores in H1. And the balance of 24,000, largely should get executed next year, almost a large part of it.
Fair enough, sir. Sir, and what about the pipeline going forward from here? Do you expect heightened flows coming in from the government as well? Because now we are going to be seeing a lot of state elections and then general elections in the next year as well, especially in the infrastructure space where you also have a large part of exposure too. Do you expect a large part of orders coming in from the government? If yes, if you could quantify that.
So if you look at what I said on the numbers, we said we have got 9,000, we are aiming at 25. So we're talking about almost doubling the order intake in H2 versus H1. A large part of it obviously would come from India, but there is some order intake which will come from our overseas operations, especially I'll say from Middle East, and part of it would come from the Americas, both North America and South America. I think these are three areas where we are looking at it for our major order intakes.
Okay. So since you talked about the Middle East, I just wanted to understand how are you looking at the current geopolitical scenario in the Middle East? Is that likely to have any kind of an impact on the order flow and the demand from that region?
It's actually very difficult to say. As of now, we are not seeing any impact. In fact, I was in Saudi Arabia around a few days back, and we did not see any impact on either on the client, on the business, or the people whom I met. I did meet people from Lebanon also. So as such, I did not see any worry in the system anywhere. Okay.
Okay.
What happens, we do not know geopolitical, but otherwise, business-wise, I am not seeing any impact anywhere. Okay, because the countries which are impacted, let's say Israel or Lebanon or maybe somewhere Iran or Syria and all that, or even Yemen, we are not there in any of those countries.
Okay, fair enough, sir. Also, sir, if you could just break up for us, like, the current revenue mix that you have from various segments that you operate in, your T&D space, railways, civil and cable space, and where do you see the maximum revenue contribution coming in the next few years also?
So typically, I don't have the exact breakup. Typically, T&D
Sure.
is around typically T&D is around 50% of our order of our revenue.
Okay.
Okay. And civil would be roughly more than 20%. Railways would be around 15%. Railways has been slightly showing a degrowth. Otherwise, railways used to be around 20%. And then we have cables, which will be around 10-12%. That's a very broad breakup. Okay. If you look at growth in terms of percentage, it would be highest to come from civil. We have grown around 42% this quarter, and I think even next year we expect at least 35-40% growth coming out of civil in terms of percentage. But in terms of absolute number, since T&D is already half of our numbers, absolute number growth would be more in T&D than in any other business.
Okay. And sir, since you're talking about railways also, I wanted to understand, is a major chunk also now starting to flow in from, say, metros, monorails, Vande Bharat, the speed trains that the government is now increasingly focusing on, sir?
So right now, if you look at the government focus, it has been more on Vande Bharat and also on station upgradation, etc.
Yes.
Okay, the infra spend has been relatively lower. That's the way we look at it. Okay, but our expectation is that now that with so many trains running, with all these things happening, with a government thrust on speed upgradation, clearly the next bout of spending would be on infrastructure. Okay, how do we have tracks which can take 160 kilometers, 150 kilometers, or how do you ensure that the safety wise everything is well, so Kavach and all that. So we will clearly see a lot more tenders coming out on the infra side in the next few months.
Okay. So could you also talk to us about the cash flows position currently, the cash on the books, and if there is any plan to deploy that cash going forward?
So right now we have a overall borrowing level of around 6,500. So obviously we don't have much of cash on our balance sheet. I think the negative for this quarter has been the interest cost, which was at 4%. We are now working on reducing it to around 3.2%. That's the action plan.
Okay, fine, sir. And going forward from here, sir, since you already have a large presence internationally also, are you planning to also expand further your footprint into any other countries?
So Sakshi, we are around, I think we are today present around 30 countries. So it is the neighboring countries, Nepal and Bangladesh and Sri Lanka. Then obviously Far East, we are there in Thailand, Malaysia, etc. Middle East, we are there in virtually every country. And we are there in Africa in many countries. So to us, it's just an opportunistic expansion. Wherever we get projects and all that, we will look at those countries. But what we are also doing is that we are trying to expand our other businesses internationally. So whether it is civil, whether it is oil and gas, whether it is railways, we have already started bidding for smaller projects, etc. We already started executing the first railway project in Bangladesh. So I think on the international side, rather than geographical expansion, which may happen opportunistically, we may start seeing more business-wise expansion happening in the international market.
Okay, so currently what is of course you said that major chunk is domestic, there is a slight chunk of international. Going forward, how would the mix change between domestic and international?
So today international is typically, I'll say most of it is all T&D. So we'll restrict it that way, that it's all T&D. So T&D sometime back was 70% international and 30% India.
Okay.
Maybe it may change slightly because the issue is that India is also growing, Saudi is growing, US is growing. So I honestly do not know whether the mixes will change because both the engines are firing.
Absolutely, and that works well for you for sure, sir. Any growth opportunities in terms of organic and inorganic growth opportunities that you may be looking at, sir?
So our civil business is completely organic. We were not there 5 years back. Today, this year we'll close 5,000 crores. So we keep on looking at new segments especially in the civil business. In fact, the last quarter we got an order for the first order for building a multi-specialty hospital in Eastern India, and then we got an order to build a very large factory for a global FMCG. So
Okay.
that those are segments which we keep on expanding that way.
Okay, and so where exactly is going to be the next one coming in from? From hospitals you've seen, FMCG now you've seen, which is the next one that you're going to see from?
So a couple of areas where we are not there in a large way would be something like an oil and gas and all that, where we do infra work, but we don't do process, etc. That could be one area. That could be oil tankages could be another big area. Third one would be on the renewable side. On the solar side, we just started doing we are doing a 600 megawatt project, but we may expand that entire portfolio of solar, maybe wind. So there are other areas. Green hydrogen is one where we already put in one bid. So, all those on the green side, on the renewables, etc., would be areas where you will see us expanding.
That's wonderful, sir. Well, on that note, thank you so much, sir, for being with us on the show, and thank you for sharing all these insights from your earnings. All the very best to you for the upcoming quarters, and we shall definitely catch up again with you to understand more about the business growth opportunities that you're seeking, sir.
Thank you for having me, Sakshi. Thank you so much. Thank you.
All right. Have a good day, sir. Thank you so much. And with that, we'll wrap up this quick edition for you so you can get absolute insights from the earnings right from the management to really understand if there are companies on your watch list, if you're already a shareholder, already an investor, then this is something that you have to continue to watch, because management commentary, management's directly talking to you, telling you about insights. So what is the vision for the company going forward? Where all are they looking at expanding? How positive are they about the growth going forward? These are the insights that really help you as a shareholder, as an investor, to really take those calls when you come to talk about the stocks that you want to include in your portfolios, with the consultation, of course, of your financial advisors. With that, we'll wrap up this quick edition, but do stay tuned on to Business Today TV for a whole lot more insight from the world of business and stock markets.
Tell us what interests you